Okay, so oil price is back on the rise, and a lot of companies such as MarketWatch have been coming out with articles on the stocks to pick to ride that bullish oil trend. So I came across this one. Opinion. They have to preface it with opinion because it's a shitty article. Opinion 3 no brainer oil stocks to consider buy now. Why are they no brainer stocks? Because if you have no brain, you'll buy them. I have nothing against this guy. I don't even know who he is. But his analysis on these stocks is just shit. So he basically says, when you choose an oil stock, you've got to jump over these hurdles. You need to make sure it has at least 80 institutional investors. It's been paying dividends for at least 25 years. So that means it has to be an old company. In other words, it has to have an S&P qual. He's basically just saying choose the safest companies you can and hope for the best. And if I'm wrong, well, there's going to be 100 million people saying that I was right because these are big companies. So, look, if you want to make money investing, you have to do the opposite. You can't do what everybody else does. The majority of traders lose money. So you can't buy into this kind of bullshit. And this is why I'm making this video. Um, Obviously, I don't have the same voice I do in most of my videos because I'm not really optimistic about all this stuff, but people need to know that as oil rises, the stocks you should get into are not these, the stocks that everybody recommends. Get in on. You need to look at two things. You've got to look at the financials, the fundamentals of the company, and you have to look at the technicals because when you're investing in oil, when your idea is that oil is increasing, so stocks reliant on oil will also increase, you need to look at the company itself. Is it improving? Not is it a big company and popular? Is it improving? And are the technicals for that company good? So I'm going to go over, I've already gone over these three stocks, and I'm going to just go over them again for you. If you want to invest in oil, these are the three stocks you should probably take your pick from. Choose one or invest equally in each. These are much better than what this guy's recommending. Okay, so we're going to start with using Morningstar, putting in our quote. TSO is the first one. This will give us the fundamentals. Now, if you scroll down, we've got a 4-star rating, but that doesn't mean anything, so don't worry about that. If you scroll down, you will get the key stats. And we want to see a lot of green bars and fewer red bars. The important thing for TSO is that the revenue growth and the net income growth are really huge. If you look at how the revenue's grown annually, well, you're going to see that it's a company that's getting bigger. Now, if you see how it's fallen quarterly, that's a result of oil falling. But compare that to the other companies that are oil based, compare that decrease in quarterly revenue, and you'll see that this company is actually quite well off. You're going to want to look at these financials. So operating income is important, but one of the most important things is to look at the total assets versus the current liabilities. And as you can see, the total assets are increasing. The total liabilities are increasing too, but not at the rate that the total assets are increasing. So this is just a quick overview of the financials. You can dig much deeper into this company through Morningstar, but generally what you want to look at are the basic financials, and I think Morningstar is pretty good at giving you a good idea of the stock just based on the colors of these bars, crazily enough. But we don't want to base it just on that. We also want to look at the technical analysis. So we're going to go to stockta.com and type in TSO. Now here's what we got. A very strong support level, which means that let's say oil falls back. TSO is unlikely to fall more than about $4 because it has already shown itself to be a strong company. People are going to invest in it. People are going to believe that even if oil is falling again, TSO is the one to rise after oil. Intelligent investors would buy into this. Other people the average investor who's going to read this kind of article or going to believe that you need to sell low or buy low, sell high, is going to avoid the stock because currently it's at a high, right? So you should avoid a stock at a high. No, not so. If you don't have a very strong resistance, look at the resistance. It's half as strong as the support. If you don't have a strong resistance, there's really no reason not to buy high. Your stock is on the rise. It's like saying Netflix is now $20, whereas it used to be $2. It's at a high. I shouldn't buy it. Well, if you know better, you would know that right now Netflix is at nearly $600. So why wouldn't you have bought it at $20? At $20, is it because the sentiment of the people around you? You have to make the decision to be different from all the other investors, and you have to avoid this kind of article. So look at the financials, look at the the technicals, make your decision based on that. Now, I would just say go ahead and get in TSO. I think this is the best of the three. I'm going to give you two more decent picks if you don't like TSO for some reason. The first one is Chevron. I typed it wrong. CVX. I don't invest in this personally. Okay, we'll do it in both. So this time let's look at the technicals first. We have a very strong resistance that we dipped under. Now, if oil shoots back up, it's very likely we break that resistance and gain a new support. Because we don't have a lot of trading above that level, it's easy to say that should we break this resistance level, the sky is the limit. We don't have any strong resistances above that, really. Now, the corporation itself, I believe, is decent in financials. Let's take a look at the total assets and current liabilities. Well, let's take a look at if you do that, it looks good. But let's take a look at the total liabilities. Okay, so obviously both the total liabilities and the total assets are increasing at the same time. What about revenue? Revenue is falling annually, but still not falling that much quarterly. It's not halving. Yes, the financials don't look that great from this chart, but compared to the industry standards, I believe this is pretty good. Let me take a look. Where are those damn bars? For some reason, they're not showing up. We've got to run through all this. Okay. I'm going to allow you to do that yourself. I'm going to tell you that I did this. I prepared for this video, so I went through these stocks before picking them. This is not like a dart throwing routine. But the financials of this corp look solid. Plus, the fact that we have a strong resistance here means that should oil continue to go upward, that resistance will become a very, very strong support level. And that's what we're looking for when we invest long term in a stock that has no real high resistance levels above it. Okay, so Chevron, there we go. There are green bars. Look, everything's green except for this. Okay, and by the way, if you see TTM, these TTMs, you can't ignore them, but don't put so much emphasis on whatever says TTM, because what they're looking at is the past, and we want to look at the future. For example, price to book gives you a pretty good idea of the future. If the price to book is good, the investors believe that in the future this stock will perform quite well. But for the pure financials, what you want to be looking at are these two, which I don't know why we don't have them for CVX. And you also want to be looking at the margins. And the margins for Chevron are quite good. So like I said, the financials are good. We're right below resistance. Should we pop above that resistance, we should have quite a good stock on our hands. So that would be my second choice. I'm going to move on to HP. Unfortunately, Hewlett Packard did not get this stock ticker. Hewlett Packard is HPQ. HP is an oil company. You might not have even ever heard of them. They are right above a very strong support level, and luckily for us, they are dipping to that support level, which means we can get it at the lowest possible price in the short term. The financials, I believe, are kind of wishy-washy, but the fact is they have very little debt. We don't need to worry about them having to pay off a lot of people. They have a very good operating margin. Now, the only real concern here is the net income growth, but if they have a revenue growth, usually you can fix your net income growth somehow within a couple years or so. You can see the revenue is growing, the net income is also growing, but just not at the rate that the assets are growing. So don't worry about that too much. Just realize that the technicals look good if we get in at a low, and if we believe that this is a solid company, please look around, don't just trust me. You're getting in at a low, relative low. Most people are going to avoid the stock for two reasons. One, they've never heard of it. Two, it looks like it's at a high. And I guess there's a three. These, big name guys didn't recommend it. So those are the stock picks for oil as oil runs upward. Get in on them. I really do recommend TSO as number one. I would say it's a pretty close tie between CVX and HP. If you have any questions, leave them in the comments below or send me an email, damon@stockbarometer.com.